Hello and welcome to Scrolling with Ceazor. Today is April 1st, 2026. Now, as usual, this is not financial advice. This is all just my own biased opinions based on the tweets that I've selected for you. Now, there's a lot of shit posting going on today, as I mentioned would happen yesterday. I don't have any tricks against you. I don't have any April Fool's jokes to shill on you. Maybe I don't have that sort of sense of humor, but maybe I don't have that kind of energy or creativity. However, I will share with you some contrast of what is out there right now, and you have to double check everything that you read. There's a lot of April Fool's shit posting going on right now, and so forth. So be careful out there making decisions or deciding what you want to do or reacting to tweets and news events and stuff like that. But let's get into the charts. So it seems like the charts are not reacting at all to April Fool's Day, which is fantastic. So ETH and BTC are up. ETH is up 1.2%. BTC is up around 0.5%. And gold is also up 1.5%. So gold has had a better day than everybody else so far, except maybe Hype. Hype is up a little bit more than that. Hype is looking okay, but it's not really. If you look at the chart, it doesn't look quite as fantastic as what like gold looks like it's gonna pump right back up to like all-time highs and stuff like that. But maybe, who knows, right? I did add a little Frax chart in here just because I am monitoring this token quite a bit because I do have small bags in it and so forth. But it doesn't look great. Now, the thing about the Frax token, like, why is the Frax token always like look like this? Now this is a pretty special chart, right? Like, as you can see, it's Frax versus SUSDS. So you might be looking at it and be like, why is the price so low, or what have you? But it's calculated price versus a interest-bearing stablecoin. So don't worry too much about that. But yeah, the chart itself, the shape of the chart mirrors the shape of the chart on Frax versus USD, and it's only down. But you got to remember, like, this token is heavily used to incentivize a lot of things. It's also the gas token of the Fractal network. Yeah, take that into consideration when you're thinking about it. Especially, like, I don't generally buy things. I farm this token by providing liquidity to different places that give this token as a reward. Anyhow, so let's move on. So today on Pharaohs, I'm going to take a look at the stablecoin cemetery. There's quite a bit here. So 2025, we lost 23 stablecoins. 2024, 20. 2023, 18, 14, 5, and 1, according to Pharaohs here. So as you can see, the trend is going up. And I believe it's going to continue to go up. So in 2026 already, we're like, 3 months in, and we're already at 6 graves. So can we beat 2025? I'm not sure. Now, in case you don't know what I'm looking at, basically it's like a list of all the stable coins that just folded. Basically said, yeah, we're done, or they got exploited into like irrelevance, or whatever happened. Some sort of thing happened to them where they decided, you know what, this is not worth it anymore, or we're wrecked, and they closed down shop. So you can kind of look at this and think about it and wonder, is your stablecoin on track to join the cemetery or not? Are you putting your coins in a stablecoin? Are you putting your value in a stablecoin that is destined to be on this chart or not? So I would highly think about that. Obviously, there are safer ones. There are things that are pretty safe, and I would suggest you to go to the safety score tab on this project and compare them. Like things like, here we have Liquidity Bold, USDC Coin, DAI, Sky Dollar, Tether, like PayPal, Pax Gold, all of these up here with like the B, the B plus, the A's, A minus. All of them are highly less likely to go to the cemetery than stuff down here with like D's and F's and and all that and so forth. So anyhow, consider that, think about that, be careful out there and so forth. So let's get into the tweets. So here we have the first tweet. This is an example of an April Fool's joke. Okay, so Circle has acquired Liquidity. The acquisition will enable Circle to offer its users a non-freezable stablecoin and directly distribute yield under the Clarity Act. So this is a clever play on like the ecosystem, on what's going on. It's a clever play on the news. It's a pretty good April Fool's joke, and it's immediately followed with April Fool's is the 1 year USDC pretends to be non-freezable. Bold does it the other 365. Happy April Fool's Day. So immediately, you know, it's a joke right there. Boom. April Fool's Day, right? Now, let's go over to contrast that with another tweet that has come out. So this is Watts Crypto, basically, you know, retweeting. And this Hyperbridge, HyperFX soon, I've never heard of this, but Hyperbridge says, we've been breached. We're working hard to fix this. Security incident report. So basically, for April Fools, I always like to tell my users we lost all their money. And it's just so funny to me. Ha 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 ha. So yeah. So there's the other side of the pendulum. We've got witty versus just sadistical and crazy and just insane. So you can compare those. So this is a good example of what you will see if you scroll through Twitter and so forth. And you know, news is not news today. You know, I hope, like, I'm going to speak on the things, and the rest of the tweets that I go through today, I'm going to assume that they're all accurate, and I'm going to speak on them as if they are accurate. I didn't, you know, it's the morning. I woke up like an hour ago. I collected tweets. I didn't back check all of this news. So if I say something that actually is me being played the fool, then I'm sorry. I'm a fool too, right? But anyhow, let's go on. So here we have David Hoffman retweeting someone, and I'm going to read what it says here. So basically, this guy, Zinc BTC, says, you literally can't make this up. What a coincidence. Nick Carter leads $20 million VC round for Project 11 focused on quantum Bitcoin risk mitigation. And dude says, you know, there's a conflict of interest. So Zinc says that's a conflict of interest. David Hoffman retweets him and says, that's brain dead cope. He says, newsflash, cryptographic currencies are vulnerable to cryptographic attacks. Nick invested in quantum solutions to Bitcoin is conviction in the problem, not conflict of interest. Now, I will simply add to it, like, Nick obviously holds big bags of Bitcoin, and he's trying to protect his bags. Like, it's as simple as that. Like, I think him investing in Project 11 to try to mitigate quantum computing risk on Bitcoin is, like, what do you mean conflict of interest? Like, how is that a conflict of interest? It's obviously him protecting his bags, and it's for the better of the Bitcoin industry. Like, it's not a conflict of interest. It's literally just him investing in a company that's trying to solve the problem that's going to destroy his bags. It's as simple as that. Conflict of interest. I don't understand. Maybe I should read Zinc a little bit more and try to figure out why he thinks it's a conflict of interest. Let's open it up. Oh, he doesn't really say. He's just like, what a coincidence that the guy who made the post with 6 billion views talking about quantum threat to Bitcoin is revealed to be the leading angel in the Bitcoin quantum mitigation. So he's saying, because the guy posted about quantum risk and got 6 million views, and now he's the guy who's invested in that problem. So look, everybody, there's a huge problem, and got lots of views, and then, oh, but by the way, I'm trying to solve the problem. I don't really, I don't know. I don't know what he's getting at. I'm a little bit lost on this one, and I'm with Hoffman on this, that, like, what Nick is doing in this case, investing his money in trying to solve the problem, that's all that matters, you know. Like, he's not, you know, creating, you know, sickness in people. in order to sell them a cure, right? I don't know. So let's move on. So ETH strategy replies to this and says ETH strategy is betting on the team researching quantum computers that will evaporate their competitors. So ETH does have a pretty good plan already to deal with this. I don't know all the details because my brain's not wet and soft enough to really comprehend like all of this stuff. But yeah, there's a roadmap. There's a quantum roadmap already. They're researching it. They're figuring it out, and they're trying to deal with it. Like they're the ones who have a plan, or at least have a like a hopeful plan that they're trying to fix it. But anyways, let's go on. So today is VE33 day, voting day. So don't forget to go to your favorite voting escrow protocol and do your votes. However, if you are on Ramesses or Ramses and you do have XRAM or you can put it as HyperRAM, or you can put it in the auto volts and just chill like I do. I love it. I love it so much. Like I don't have to go to Ramses every week and just hammer away at my votes and try to select which ones I want to vote on, and then go and sell all those like shitcoin bribes that like, you know, all the meme coins that are bribing L liquidity pools. I just let them do it all for me. Even if they're taking a fee, it helps save my time. I don't even know. I should probably check, but the AutoVolt's probably taking a fee. But knowing this protocol well enough, I should probably check this, but knowing this protocol well enough, I would think they use those fees to buy back RAM and burn. But anyways, this is another week where fees generated are greater than emissions distributed. So yeah, keep going, guys. Moving on. So here I have Protocol FX. Protocol FX has, I talked about this on March 10th or March 11th, right? One of these 2 days. So early last month, and they've put their money where their mouth is. Okay, so what is this talking about? So they've deployed $5,000 into 6 builders who actually shipped. Our building grants are going to. So there are five agents here, 5 AI agent protocols that have been given roughly between $500 and $2,000 US dollars worth of FX USD, and they can put those things to work. So you can go in and dig a little bit deeper on what do these AI agents do. As far as I can tell, they are like mostly trading bots, or kind of doing stuff like trying to use AI to make trading fun and stuff like that, or not fun, automated, and try to be profitable bots and stuff like that. I know that the Banker token there's a token for this Banker, so you could probably reap the benefits of this bot. I'm not sure. I got to do more research on this. This is not something that I really want to play with personally. It's kind of outside my interest level, like my wheelhouse. I like to manually do things still. I've got a little bit of automation, but like obviously I've got smart contract automation, right? But I don't have AI bots running stuff for me, and I do have a little bit. I do have some like AI agent stuff going on, but I haven't really gone deep into these, and I should probably look at them a little bit deeper. But anyhow, I thought I would share that with you. You can look deeper if that's something you really want to do. And I do like that FX protocol is they're trying to build out a niche for themselves where FX USD is a AI coin, because it is permissionless, it is immutable, it's on chain, it's good stuff, right? And AI agents are more likely to want to use this than USDC that can be frozen, right? So they're actually giving these AI agents monetary money to test with, which is fantastic. So the devs who are working on these, they don't have to invest their own money and possibly take on losses and so forth. So check it out. I think it's pretty cool. Okay, here we have Hey Anon. Hey Anon is another AI protocol. So they have integrated a lot of things in the past, in the past weeks and so forth. So now they've integrated Pump Fund. Okay, so it's basically what this thing can do. Let's read through it. So your agent can design, deploy, and create tokens. Full stack automation, agentic tool dev toolkit. So yeah, that's it's tech, right? And I'll give it to these guys. They are building stuff that people might want to use, and I don't want, like, I don't trade pump fund coins, and I'm definitely not going to. And now there are AI agents who are dominating this market and hammering these tokens. And they're trading with each other. They're launching their own tokens. They're trading with each other. And now it's even easier, thanks to Hey Anon. So yeah, but what I can say, like, is that at least they are building the bot to be what it should be, and that is permissionless to do whatever you want it to do, right? They're building the tools to allow people to do whatever they want to do with their AI agents. Now, you vote with your money. If you want to vote on this as a sustainable, good venture, then you can vote with your money and give your AI agent the power to do this and the money to do it as well. Okay, moving on. So here we have Jordy from Cryptoland. I really like this guy. He does very good posts, right? He does his research, and his posts are pretty small and succulent and easy to digest, right? So basically today he's talking about the change between VEYFI and STYFI. So the migration of YFI token on Yearn Finance. So they left the VE model because it was like a 4-year lock, and people don't really want to do that anymore. There are still protocols doing it, like Curve and Aerodrome and stuff like this, but the vast majority of protocols that have some sort of VE system, they've reduced their locking time significantly, or they're going with something else, right? So Yearn was successful at migrating from VEYFI to STYFI. And if you hold STYFI, you get 90% of the protocol revenue to your token holders. So, and it comes in the form of YVUSDC. This is the best part of it all. Any protocols that give out USDC, that's great. That's awesome. But then you still have to go there every week then and claim those tokens and put them to work. Otherwise, you're just holding spot USDC and getting killed by inflation, right? So, whereas Yearn is automatically converting your USDC into interest-bearing USDC deposits in their USDC vault. So, what is the interest rate on the YVUSDC? It's around 3%. Sometimes it's 5%. Sometimes it's 2%, right? But the point is, you don't have to go there every week and claim this. You can just let it build up, and you're getting interest on it, and then you can go and claim those tokens out of the contract, take custody of them, and so forth. So that's fantastic. So you can check this out. He does mention a few other teams that have decided to migrate away from the VE model. So PancakeSwap as well as Pendle. A lot of teams are kind of considering this, and if you are producing a project, I would highly suggest you consider the effects of asking people to lock your token for 4 years. It's kind of antiquated. It's kind of like, I'm not saying protocols like Curve or Aerodrome, Velodrome, and stuff like that. I'm not saying they're destined to die because of this. That's not the case. However, asking people to lock for 4 years now is harder, much harder than it was, when everybody was, frothing with like free money, and everyone was rich as crazy and had no problems locking tokens for 4 years. I locked lots of tokens for 4 years, and I totally regret some of them. Totally regret. So some of them, like $20,000, are now worth like $400 locked, and I can't get it out even still yet. It's producing no fees. It's just like gone, money gone, right? But yeah, people lose that kind of money on perps, right? And they just easy. I'll open a position, and in 30 seconds, you've lost it all, right? So anyhow, moving on. Here we have Alexander from Velodrome. I was just talking about Velodrome, and here we are again. So he's all he's doing is just eyeballs, retweeting Woo Blockchain. But let's read what Woo Blockchain has to say in their tweet. So it says 10 executives and employees from 4 cryptocurrency market making firms, Gotbit, Vortex, Antler, and Contrarian, have been indicted by the U.S. Department of Justice for allegedly manipulating token trading volume and prices through wash trading. 3 of these defendants have been extradited from Singapore to the United States. Ooh. So yeah, it's good to see the government is going after, manipulators. Obviously, these protocols who are, doing this wash trading and, manipulating volume and stuff like that, fake volume. Obviously, they're making money doing it. They're not going to do it just for free and for fun. Maybe somebody's paying them directly to do it, or it's a profitable trading strategy, right? So, in the sense that like they're able to extract value from everyday users, or they're able to just basically like take fees from protocols. And where do those fees come from? Where does that revenue come from to pay their market maker fees? It obviously comes from the community of token holders and so forth. So I'm all for this for somewhat. Obviously, there's a gray line there where like, are they creating fake volume and wash trading, or are they actually just providing the proper service? There is a gray line there, and I don't know where that gray line lies. Like I'm not an expert on this and so forth, but yeah. So there's that news. Is this April Fool's? I don't know. It is 12 hours ago, so perhaps it's pre-April Fool's. Okay, so moving on. Here we have Noah, Trader Noah, wild headline. So it's like 7 months of runway on 86 million treasury. So he's retweeting Uniswap's article, and basically it's like on the block. So basically with 86 million dollars in the treasury, Uniswap can only run for 7 months. 86 million. Like that's crazy. Uniswap Foundation projects runway through January 2027 as treasury reaches 85 million dollars. Like that's crazy. Like that's 7 months. So let's say it's 6 months. Okay, if they had 86 people, that means each of those 86 people are making like $2 million a year to do what they do, but they don't have 86 people paying. So other people now, there's some back end costs and some graph and deployment gas costs and stuff like this, but maybe that's $2-3 million a year at most, right? At apps, and that's being super like generous, right? Uniswap does not have shit tons of data processing to do. They're not running like AI feeds and stuff like this. So I find it to be crazy. Now, of course, you can go in here and you can read this article by the block. I don't really like the block so much. I don't know why. I think they just look like complete sellouts. But anyhow, maybe I don't know. You can kind of go in here and figure out why $86 million is only going to last them 7 months and figure it out. Okay. Moving on, Frax Finance is talking about Aave v4. I did do a video on Aave v4, so my understanding is public, and if you don't want to read the docs, you can watch my video. It's on the YouTube channel. Do I have it open? I don't think so. No, I'm not going to go digging for it. So yeah, you can check out how it works, but it's basically isolated markets, okay? So in V4, liquidity hubs hold supplied assets, split the active liquidity used for borrowing, and utilize unutilized liquidity sitting idle for unborrowing. So again, I have a video that explains it. Basically, they're isolating risk a little bit, but also like if that isolated risk is not being utilized, it'll be sent elsewhere to increase yield for lenders. Okay, so One of the most what most people think that Aave is one of the largest, most secure lending platform in DeFi. So this is Frax's words, okay? With V4, it is also involving the most capital efficient. One of V4's key innovations is reinvestment module. Instead of letting access stablecoins sit idly, the V4 is designed to make them more capital productive while keeping a safety first approach to compete with existing TradFi systems. DeFi needs to leverage programmability to increase capital efficiency as borrowing demand varies. Supply APYs on Aave have at times fallen below risk-free rate. So, the T-bills basically. And reinvestment modules set the productive floor for depositors. Why FRX-USD is a natural fit. FRX-USD is a secure stable coin and also the most productive by forwarding underlying yield to partners like Aave. So the yield that the backed assets. So if you look at the backing of FRX USD, now it's pretty much comparable to that of like USDC or even maybe Tether, right? USDT. You can compare them. I'm not going to go into exact details, but that's for you to do your homework if you want to know exactly how it's backed. But you can compare it. It's very similar, okay? Like T-bills and bonds and stuff like this, and treasury assets and cash and stuff like this on hand. So TradFi instruments, basically. So they're taking that yield that they're getting off chain, and they're sending it to places where FRX-USD is deployed and lent and so forth. So if you were to deposit your FRX-USD into Aave, you would lend it to people so they could borrow it. Then you're going to get their borrow interest rate, which will vary, but you'll also get like the interest that Frax is getting from their treasury holdings. Okay, so you can kind of go through that, check that more, and so forth, and understand it. I like this stuff. It's like I would much rather hold FX USD than USDC. Specifically, think of it this way: like Frax is literally transparently, like is as much as possible, right? They are transparently sharing the treasury's yield with the users of their coin, whereas Circle just hoards it. They're just sucking it all into their treasury and keeping it. And Tether the same. Now Tether does use it to buy BTC, so they're buying the dip, building their treasury even bigger, creating more backing, and so forth. And then I assume both of those entities are then using their extra backing to mint USDC or USDT and deploying those into yield strategies. But what does that do? That basically washes out users from the market. They're taking over the market from everyday users and pulling it all into a single treasury. So if you want exposure to it, I guess you could buy the Circle token or the Stonk, right? But I don't think they're handing out dividends to those guys yet. I don't know, but yeah, there's that. And then whereas Frax is like giving that yield to the users, to the people, and that's a significant difference, a very significant difference, as far as I know. Now I could be wrong. It could be like, Ceazor, you're full of shit. Right? You could call me out. Please do if I'm wrong. I would love to know that I'm wrong. Well, I wouldn't love to know I'm wrong. I would love to know that I'm right, but I like to know if I'm wrong. Okay. Moving on, Bantag is retweeting something. So I say, this is a mature response, by the way. A person is already torturing himself for this. It's the only right for the team to step up and take the blame. So here we have Boris Cherny. I've never seen Boris Cherny, but basically Claude Code anti-tropic AI. So he's stepped up and said mistakes happen as a team. The important thing is to recognize it is never individual's fault. It is a process, a culture, and infrastructure problem. So the leaking of, in case you don't know, Anthropic team, or they leaked Claude code to the public. Pandora's box was in essence opened. Devs started forking, deploying to GitHubs, and then started copying the code base into like open source languages like Rust and Python and stuff like that. So that happened. Now, I'm not an expert on AI, as you obviously know. I don't even run my own AI bot. But what I've been able to gather of an understanding of this is it's not like now Claude is free. Like you still have to access the GPUs. You still have to pay to use it. It's basically some of the features that the front ends, like the user the UI, it's basically the way I'm understanding it's like they like if you go to some protocols and you want to interact with their smart contracts, you have to use their front end, and maybe their front end is closed source because it has like calculations and algorithms and proprietary stuff in there. And you could interact with the smart contracts, but maybe it's super hard, so you use the front end. It's basically, that's the way I understand this. Like the front end was basically leaked, and now anyone can just plug in, but they still need to pay credits to use the GPUs and access the servers and stuff like that, and maybe even the language model. So it's not such as big news as what I thought it was, but that's what I understand. Now, again, I'm Ceazor. I'm not perfect, and I'm definitely not an expert here, and so forth. But Bantag and Boris Chetny, they have a good point. Like a little while ago, last week, the week before, we have all this talk about Resolve Protocol, USDR, and the leaking of the private key. And I was always wondering, like, so who leaked it? Whose fault is it, right? That's interesting. People want to know, like, who should be hung, who should go get onto the chopping block, and whose head should roll, basically, right? But what he's saying here kind of changes my personality or my opinion on this, like, drastically. Like, maybe it's not that guy's fault, and it's a system of like a security system that should be set up so that an individual cannot leak this. Like, for example, the Resolve should never have had an EOA able to do what they were able to do. It should just never have been possible. And then if someone did accidentally leak the private key, then they only have the power of like a multi-sig or something like that to do stuff. Not a single signature can have that level of power. So here we have the same idea where the systems need to mature to a point where it's a process, and the process has many steps and many individuals who interact with it, and it might be slower and it might take more time, but it will be safer, and that's kind of the point he's making, and I agree with him on that. So let's move on. So here we have Serpentax. Serpentax is the leader of Ethos. If you don't know, Ethos Network. I actually just did my human verification yesterday, so I don't have to pay gas anymore, I think, to use it, which is fantastic. But when I go to Ethos, I always feel like it's like a super echo chamber. Like, nobody knows me. I don't know anybody there. It's just kind of like going into a party filled with people having fun and talking and messing around. There's some fights in the corner, but when I look across the faces, I don't know anybody. And that's kind of what I feel when I go to Ethos. But anyhow, what does he have to say here? So, Pump Fun, okay? So I talked about Pump Fun a little earlier today, and here he is talking about it. So, has anyone figured out how Pump Fun is making nearly $1 million a day right now? Consistently, every day since 10/10, when every other revenue chart is down only since? Is there any chance that it's inorganic? Of course it's inorganic. There's tons of bots constantly deploying, and it's like a bot like fest, like those like tournaments where people use like remote control bots, like robots, to fight each other in those little pits, right? It's basically that, but without remote controls, right? It's just a whole bunch of bots. It's like deploying coins all the time, trading coins each day, trying to like outbot the other bots, and then humans going in there and just getting slaughtered. Like I feel like that's what it is. Now I could be completely wrong. I don't know, but this is just my impression of what's going on over there. Now this guy here, Pedro. Pedro he says, don't underestimate how degenerate everyone in this space is. And he's like, retail, and then this guy Harsh says, retail activity alone can print that kind of number. So maybe I'm wrong. Maybe there is shit tons of people still going and trying to ride those like 50-second waves of pump fund token charts. I guess that's possible, but the way I'm seeing it is it's just shit tons of bots, and they're just fighting each other. And any human, like, it's like, if you think about it, like, let's say there's like a big mecha, like an automated mecha, like, you know, those big Japanese giant robots, and they're all like out in some like, you know, plains, like out in the plains of fucking Australia, out in the desert of Australia, and they're all doing battle, and they're fighting each other for money, for coins. And then like humans go in there and say, I can fucking compete in this game. And they step in there, they just get stomped like a cockroach, and then it's just, that's the way I feel. Like, I could be completely wrong, but that's just the way I picture it. This is what I see in my mind's eye, and why I completely just stay clear of it. Now, you know, maybe I'm a loser, maybe I'm a cope, and I'll never be rich because I don't play pump fund coins. But anyhow, that's that. Moving on. So here we have Gabriel Sapiro, LexNode. LexNode, he dropped a new Telegram that you can join. It's called, what's it called? Plebs.eth. And it's kind of cool and fun, and there's a lot of good, cool banter going on in there. So you can go in there and check it out. Just go to his profile and just look through his recent tweets, and you'll see it somewhere in there. So join that. Okay. Anyhow, so what does he say here? It's time for, I'm going to read through this because it's pretty good. Okay. It's time to fix Ethereum once and for all. We cannot wait for slow, uncertain ZK EVM Gigabrain improvements for 1 second longer. Institutions are unwilling to deal with the continued MEV and slow block times in the name of some sacred cow of decentralization. We need trillions of RWA IOUs, not now, tomorrow. Wall Street is waiting. So he's got a good point there. And this is coming from someone who's like basically saying, like, you know, all the stock on chain right now are just fucking show ponies, like just cosplay, just bullshit, right? So that's coming from him. So anyhow, so today I submitted EP9999, which will replace Ethereum's slow, inefficient, distributed proof of stake validator set with a single mass, single scale bare metal validator, aiming for sub-millisecond finality and eliminating MEV. I call it the singleton validator consolidation. So let's get rid of all those bullshit like single staking nodes. Let's get rid of all of that, like, you know, distributed ledger, and just let's stick it all on a awesome fucking gigantic server machine. We're running 1 million validators to do what? One mass scale bare node could do in sub-millisecond finality. Every slot, hundreds and thousands of attesters fly across the globe. Attestations, fly across the globe so that nodes can all agree on something that we already know is going to agree on. This is a computational equivalent of 400,000 people replying "sounds good" in a group chat. MEV, coordinated failure, disappears with a single sequencer, FOCIL, unnecessary if it was one inclusion policy. Censorship resistant, be honest, all the writ acts of compliance, EIP 9999, singleton validator consolidation. One server fixes all these problems and more in one fell swoop. Institutional grade blockchain via radical latency elimination, IBRL. Instant finality, no MEV, no slashing, no attestations overhead. Disputes resolved by memo double spaced 12 point times new time. I was trying not to. I tried not to laugh. Okay, but I'm sorry. Times New Roman, 1 inch margins. The CryptoPunks can rest, and we have achieved full regulatory liability. And then he's got a link to his EIP posted April 1st, 2026. So yeah, I said I wasn't gonna like go into it, and that's my attempt at being a April Fool's prankster. Obviously, Gabriel does it better than me, and I tried to make it sound like what he was saying was genuine, but I failed. I'm sorry. But let's move on. So here we have Michael Urgarov. I can never say his last name, and I'll never try. I should just say Michel. Okay. So Michel from Curve, he has retweeted Jordi from Cryptoland, and what does he have to say? They're talking about Uniswap V-Switch. Uniswap V-Switch has been pretty bad for Uniswap in the sense of TVL dropping quite drastically. Okay. Now, why is it? Now, Ergonov or Michel, he's going to speculate on why he thinks that might be. Okay, so LPs in Uniswap operated on the verge of profitability. Now profit is negative because they're giving up some of their fees to token holders, basically, to Uniswap token holders, which is so anyways, so and anyone who wanted to hedge, like good shorts to hedge, were killed by Athena. So Athena basically gobbled up the ability for LPs to hedge their positions, right? And directional LPs will stay, but delta neutral LPing of crypto on Uni is having difficulties. Okay, so yeah, people are not able, like, if you want to like go long on a token, it's quite good. And the way I use like concentrated liquidity, like as I shown in these charts and stuff like that, to gain fees, farm fees while it bounces around inside my range, and then when it goes outside of my range, then I'm out of the token into US dollars. If you want to make bets like this, this is fantastic. Uniswap is great for this. I prefer Carbon DeFi, but you can use Uniswap to do this quite easily, right? And when it goes out of the range, then you're good, you're out, right? And so forth. But that's what he's saying. This is still okay, but if you're just trying to like farm APR and hedge your risk, it's really hard to do now with them like basically taking a good percentage of your fees. Okay, so that's what he's talking about there. Okay, and yeah, so let's move on to Inuk. So this is outside crypto. Why is it here? Oh, I should put that on at the end. So let's go through this, and what's this one? So this one I already talked about, sorry. And here we have Nico.eth, Ethereum development for getting to considered solar stakers, big resounding nope. As Justin Drake, specifically lays out how the straw map affects stakers and which items they need to pay attention to at ETH conference stage. So I didn't watch this thing. I'm not a solo staker, but I'm happy to see that like they still trying to keep solo staking a thing. I generally just wait for Ceazor.eth to explain it to me, right? So when he explains it, I'll understand it better. But yeah, so they've got a roadmap. They've got a nice. They're continuing to consider the ETH solo staker as a valuable addition to the protocol and to the network as a whole, and I like that, and that's awesome. So now outside of crypto, we have Inuk Brook. He's retweeted a video here of some lady who's being arrested, and she's talking. I'm not going to read this whole thing, but you can if you want. I'll kind of, you can pause the video and read it, but basically some guy in Ireland, I remember this being in the news a little while ago. So he refused to call his student by the they pronoun several times, and he's been imprisoned and released and imprisoned again. So he refused to call the student by the name they pronoun, and was suspended, and now he spends 600 days in prison because he's like, yeah, I'm not going to call that girl or boy they, it's he or she. That's his religious belief, right? So he was put in jail for refusing to do that. And here's his mother and his sister. They went to visit him, and when they left the prison, they were arrested, and they're being arrested for spreading awareness of their son being imprisoned because he did not say they to someone who wanted to be called they. Now, this is insanity, guys. Like, I don't know what's going on in the world where this is actually a problem and worthy of police like intervention. Like, these cops, they're just doing their job. They're being told from above to come down here and do their job and arrest these people. And the laws are the laws. So can we blame the cops? Not really, but and what are you going to do? Quit your job because you disagree with what you have to be doing? I don't know. I don't think people are going to do that. They're just the police are just going to continue to do what they're told, and that's kind of how police works, right? Like, it's like a soldiering thing. Like, you need to do this. Like, you need to follow orders, and that's how like police forces work, right? It's a top-down order procedure. So like I don't think we can crucify the police, these individual cops, for doing this, and I definitely don't think they should be the focus of the attention. The focus should definitely be on the tops who are sending down these orders to arrest these women for basically speaking out about their son and brother being imprisoned for refusing to call a single individual they. Like, words have meanings and so forth. So anyways, I thought I would share that and talk a little bit about this in my idea and my ideas on this. I'm not an expert on this. I don't do a lot of research on this. I'm not following this a lot, but that's what it is. That's what that's what I'm seeing today. Okay. So anyhow, thank you so much for listening, and I hope this has been interesting and useful, and goodbye.